I don't know about you guys, but the sideways chop with no movement in the market's absolutely killing me. And I think we kind of need to make a decision now. Is this a bear market? Because it really is starting to feel like a bear market. Interest is down, Bitcoin price isn't really moving. Or is this a correction in a bull market? That's what we're going to be discussing today, but we're going to be looking at it through the eyes of data, not through the eyes of sentiment, because sentiment can fool us. And what I've done is I've taken all the data and I've compiled all the bull market data and all the bear market data, and I've put it into one sheet, which basically shows us whether we're in a bull market or whether the bottom is actually in a correction. And that's what I want to go through today. I actually want to go through the sheet and talk about whether we're in a bull market correction or whether we've hit the crypto bear market, and whether it's time for us to basically just accept the fact that we're in a bear market, deal with it, position our portfolios accordingly, and then basically move on. That's what the show is about today. So if you're feeling the way I'm feeling, I think it's going to be a very good show for you. Let's get the show on the road, guys. Let me know in the comments what you think. Bull market correction, bear market. I know I did do this poll on Twitter, and where was that poll? Let's have a look here. Here we go. Now more people actually believe it. We're in a bear market. So maybe that could mean we're in a bear market, or that could mean that we're at the end of the correction. That's what we're going to basically talk about today. I think it's going to be a very fun show. I'm back here for today and tomorrow, and then I'm going straight back to Solana Breakpoint to bring you guys live coverage from Solana Breakpoint. So listen, if you're here and you're still here at the end of 25, after all the abuse that we've taken in 2025, good to see you. Good to see you. Subscribe to the channel if you're not already subscribed. If you're here, like this show. Let's remind everybody, and specifically the YouTube algorithm, that Rani's here and Rani's back and Rani's doing shows. I wasn't here yesterday because I went to the doctor. And on Friday, I was basically flying. So you guys missed two shows. But now we're back. Someone says there's an echo on my sound. Is there an echo on my sound? Or is it only one person saying there's an echo on my sound? Is it? Lauren says there's an echo on my sound, but it's only Lauren.
Yeah.
Okay, so it's only Lauren.
I've got it on YouTube as well.
Amazing. No echo, all good. All right, so let's get into it. Let's actually get into data. And I'm counting on you guys to hit that like button, because I see that right now the likes are very low, 162 likes. It's not going to get us to Valhalla, guys. It's not going to get us to Valhalla. Let's talk about where we're at, and let's call a spade a spade. It's choppy. It's boring. It's killing people. The interest in crypto is at bear market levels. When we have a green day, and yesterday we had a green day. Yesterday the bubbles were green. And then like people woke up and they were like, whoa, look at that, look at that, look at that. And the truth is, immediately it breaks down our spirits even further. It comes back down. And here we are again, back at the 90,000 level. At the same time, all the world markets are at all-time highs. The Nasdaq is at all-time highs. The S&P is at all-time highs. Gold is at all-time highs. It becomes much more frustrating actually being in crypto. And that's exactly what's happening. People are getting chopped out. If you look at Google searches, just look at where we are in Google searches. We are at bear market levels on Google searches. I kid you not. Also, if you look at people searching for Bitcoin bear market, have a look at that. We're at the highest searches for Bitcoin bear market, which means the majority of people now actually believe that we're going into a bear market. If you look at the exchange volume, if you look at the 7-day moving average of exchange volume, the 7-day moving average of exchange volume is actually going into bear market territory. Like if you look at this, we're going back into 21 and 22 levels. And that again shows that potentially we could be in a bear market. If we look at the usage on chain of the apps, we see we are above bear market levels, but we're very fast declining on the use of apps on chains. And so I think today the time has come. We have to make a decision. Are we holding on to this hope that maybe we're still in a bull market? Or are the people that called the top of the bull market in October 6th, were they actually right? And is the four-year cycle actually in play? If that's the case, I think we have to take our hats off to 𝗕𝗃, right? Because you can see that 𝗕𝗃 actually called it, what was the date when he actually called this? 18th of October. 8 days after October 10th, 𝗕𝗃 basically called the top. I think he's called the down cycle here very well. And I think that if you want to support him, he actually sent me something here. I want to actually show you what he sent me. He's doing a massive stream, I think, in Christmas. I don't know if you saw that, where he's giving away $500,000. 𝗕𝗃 is a great guy. His heart is in the right place. I'll tell you that much. And actually, his market calls have also been very much in the right place. I know that often him and I go at each other, but that's good because you want to have two different opinions all the time as long as you respect the person who's giving an opinion. I'll tell you one thing though, that 𝗕𝗕 is definitely one of these people that's earned my respect. Both from an individual person, like in terms of his work ethic and his just general ethic, and B, from the way that he's actually called this market and he's stuck to it with conviction. And I don't also know if you've noticed, but the guy streams every single day. Rain or shine, he's there. He's the first guy streaming. So join his channel, join his stream. We'll leave a link for you guys below for you guys to do it. But we may have to move to your side. And he called the end of the bull market here. Ultimately, if you look at the 4-year cycle, then yeah, the cycle ended around the 10th of October. The 6th of October was the high. It was 597 days. And that was the end of the cycle. If that is the case, then technically we're 17.5% of the way into the bear market. Why do I say that? Because generally, if the 4-year cycle holds, then you get about a 1-year bear market. But if the bear market started on the 6th of October or the 10th of October, and now we're on the 10th of December, we're 2 months of that 1 year in, which means that already we've absorbed 17.5% of the bear market. That's in terms of time, but that's not in terms of pain, right? In terms of pain, you can see that when you go into this 1 year bear market, we're just at the beginning of the pain, the price pain that you actually take in the bear market. And more realistically, if we actually did get down to, if this is a bear market and we did get down to bear market levels, then we're probably talking about a $56,000 level on Bitcoin at the bottom of the bear market. Now, where do I get that level? That's the 200-week moving average. And if you look at the 200-week moving average, generally in bull markets, or generally in markets, we don't actually break the 200-week moving average, right? The 200-week moving average is a massive, it's a 4-year moving average. And when you look at a 4-year moving average, what you can see here is you can see that there's on a 4-year moving average, Bitcoin very, very, very seldom breaks down below the 4-year moving average. The one time that it did was here at the end of the 2021 bull market, and then multiple other small times for 1 or 2 weeks. Generally, you don't want to break below this. And so that would be the level of support, right? The first level of support for me would say, if we are in a bear market and we are going to go down and we track all the other bear markets, what you can see is after 1 year, we hit the 200-week moving average, which would take us back to 56,000 or 60,000. And so we have to be ready for the fact that this may be a bear market. And the fact that some people, like 𝗕𝗕, as I said, called it very, very, very early and he stuck to it with conviction. That may be the case. However, I also want to remind you of someone says 𝗕𝗕 is very good. 𝗕𝗕 is very good. As I said, you know, the idea behind Banter and the idea behind being in markets and interacting with people in markets is not to find your echo chamber. Because in your echo chamber, everyone will tell you that you're right and they'll just reaffirm your decisions and ultimately you'll cause your own bubble. But the fact that you can find someone like 𝗕𝗕 where, you know, the guy's knowledgeable enough and experienced enough to actually debate. So you can have a debate them and he can debate you and he can say, look, this is the reason why I think and this is the reason why you think. And at the end of it, you still love the guy. That's the big difference because you still respect him because he's not coming to throw stones. He's coming with a good opinion. Those are the people that you need to surround yourself with. And that's why, as I said, I surround myself with 𝗕𝗕. We'll leave a link to his channel below. And I'm reminding you guys again that he's doing, like, again, you want to see where the guy's heart is. This is where the guy's heart is. On Christmas, this guy's got a family. One day before Christmas, the guy's doing a Christmas edition thing, giving away $500,000 to his community. It gives you an idea of where this guy's heart is. His heart's in the right place. Also, I tell you, I work with him, so his heart's definitely in the right place. Anyway, so if we are in a bear market, and the 4-year cyclists were right, and we can see that when we look at the 50-week SMA chart, which shows that we've broken down below the 50-week SMA, and we have stayed below the 50-week SMA now for over 2 weeks. In fact, we're there for 4 weeks. According to Ben Cowan, this would be his invalidation zone. And so most people are starting to capitulate to believe that we're now in a bear market. And it does feel like a bear market from someone who's been here in multiple bear markets. News doesn't move markets. When good news doesn't move markets, you know you're in a bear market. Or it feels like you're in a bear market. But here is my comeback to that. I know that corrections are not really corrections. I know that corrections are there to change sentiment. And when the worst of the corrections end, is when everyone believes that that we're at the end of a bull market, and that is when the market turns and inflicts max pain on the market. And right now, I think we're getting to that point. We're getting to the point where more people believe we're in a bear market than a bull market. People have capitulated. People have dropped out. And the market is set up perfectly for that one green candle that is going to get everybody out there. And when I say one big green candle, I mean a big green candle that's going to take us to 110,000 or 120,000. I don't mean like a $1,000 green candle. I mean the FOMO candle, the one that actually gets us there. Now, the question then becomes, well, what could possibly happen that would give us a green candle that would take us to $110,000? And I bet you're asking the same question. And I bet that if I ask you the same question, you'd say to yourself, well, I can't see a single thing that Trump can do, Powell can do, the markets can do. I mean, if I said to you now, Powell's going to cut rates by 50 basis points, would that get Bitcoin to 110,000? Probably not. If I said to you that Powell's going to get replaced by a Fed chair, which is completely dovish, it was a Coinbase advisor, 𝗙𝗘𝗂𝗓, that's not going to take Bitcoin up. If I said to you that America agreed on a strategic reserve, would that take Bitcoin up? Probably not. When you don't have a reason, when you cannot see a reason for the market to go up, that's when the market fools you and actually goes up. And I'm telling you this because I've been here a million times and I've been in a situation before. And do you remember when the Bitcoin ETF was approved? When we all thought the Bitcoin ETF wasn't going to get approved? And we kind of said, we all wrote it off. If you were here, you'll remember, we wrote it off. And then they surprised us by giving us the Bitcoin ETF. That's exactly the type of thing that the unexpected is what will move this market and give it the green candle. Because if it was expected, it would already be factored into the price somehow. So we may be in a bear market, and it's starting to feel more and more like a bear market, but we may also be at the last part of the correction when everybody believes that we're at the end of the bull market, and we're actually not. And everybody that did believe that we're actually at the end of the bull market will actually miss because they'll be positioning themselves as out of the market, and they'll come back and they'll look at it. It's a possibility. We have to look at the possibility on both sides. But we must look at it with data, not with emotion. And so what I did was I compiled a spreadsheet, or more correctly, my researchers compiled a spreadsheet. And we took all the different indicators and we said, do they indicate a bear market? Are they inconclusive? Or do they indicate that the bottom is in at the end of a correction? And that's what I want to spend some time on today. I want to go through this thing, and I want to go through the things that are telling us that we're in a bear market, the things that are about to flip or not, or the things that are telling us that this is a bull market. And I want to compare those things, and then we can make a calculated call and not get shaken out by emotion. Emotion is not only fear and greed, it's also apathy. The lack of emotion is actually an emotion. And when people get apathetic about markets, that's the most dangerous time. Because when there's fear and greed, there's a lot of energy in the markets. Whether it's good energy or bad energy, there's a lot of energy in the markets. But when people get apathetic, there's no energy in the markets. So let's look at the indicators. And let's talk about whether they indicate that we're in a bull market or at the bottom of a correction. And then decide whether this is the beginning of a bear market or whether we're going into, or whether this is the end of a correction. And I want to start off with the obvious ones. The obvious ones are when you look at the 4-year cycle. So if you're looking at the 4-year cycle and you're looking at the number of days, tick, we're in a bear market. If you're still a halving cyclist and you still believe in the halving cycle, then here, 𝗙𝗃𝗃 is in the chat. It says much love, or his social media manager is in the chat. Believe it or not. I'm telling you guys, good guy. Follow him. Put a link to 𝗙𝗃𝗃's channel so the guys know who to follow, bro. That's already in. Of course it's in. Okay, don't go there now though, because now we're live. Go there after we're live, of course. Cool. So if you're a 4-year cyclist, it's a bear market for you guys. If you're looking at the 50-week SMA and you're saying, look, my indicator is like Ben Kahn's indicator, which is under the 50-week SMA for 2 consecutive weeks. Okay, we're in a bear market. Okay, so we're in a bear market over here, as you can see, and therefore I've marked it in a bear market. If you're looking at social metrics, and by social metrics, I mean Google searches, I mean YouTube views. If you look at the YouTube views now, we're at bear market levels. I mean, there's the bear market over here. And we're basically at bear market levels. But the one thing you can say is that we never actually got to bull market levels. But ultimately, we're at bear market levels here. Also, I want to caution you here because this is a retail indicator. And this cycle, and probably all the next cycles, are not going to be retail driven. So be careful how you look at this. But what you can see is that on the social metric side of it and on the searches side of it, we're definitely in a bear market, or we're at bear market levels. All right, then we move on to volumes, and we move on to on-chain volumes and stuff like that. And when you look at the on-chain volumes, we're at bear market levels. I mean, that's the 7-day levels. That's the 7-day levels in the bear market. We are at bear market levels when it comes to volumes. So the volumes have capitulated and basically told us we're at bear market levels. Exchange volumes are down, etc. We carry on looking at the charts, and we look at the RSIs. And what we know is that in a bull market, the RSI on the weekly bounces off the 45 level. And I said to you that was one of my levels to say, look, if we drop below the 45 level, we've got to admit that maybe we're in a bear market. And if you look at the RSI now, the RSI is at 39. It's way, way, way below the 45 level, right? And so you can see that in all the bull markets, even we bounce off 45. The last bull markets, we bounce off 45. The minute we go under 45, that usually signifies that we're in the beginning of a bear market. And so now we're down below the 45. We're at 39. So if the RSI is your indicator, it's broken. We look at the activity and the active addresses, and this actually comes from Glassnode, from CryptoQuant. And what you can see is that they actually measure when we are at bear market levels on chain. And right now we're at bear market levels on chain. You can see that's the 2022 bear market, and you can see that's the 2019 bear market. And ultimately, all these indicators on chain are showing us that we're in bear market levels. So we've got to tick that and say, if you're looking at the on-chain and active addresses versus total addresses, we're in a level. If you're looking at the RSI weekly bearish divergence, this chart looks very, very, very much like this chart over here. This is the 2021 chart. And if you look at the RSI and the weekly bearish divergence, mirror image of one another, which means we could have another bounce, but ultimately we're in the beginning of the bear market. And I want to remind you that in this bull market, we haven't actually even had a single bounce. Not a single bounce. Not a single meaningful bounce since the October 10th and the whole capitulation. So all of those things basically tell us that the bear market is here, and that we should, stop holding on to hope and emotion and what we actually want, right? And just say that, the bear market's here, and deal with it, and realize that we are 17% of the way into the bear market. And if we are 17% of the way into the bear market, we've got a long way to go. We've got a 51% move to go all the way down to the 200-week moving average. Then you get to another bunch of indicators, and those indicators are basically indifferent or inconclusive. So the first one is this one over here, which is the weekly Gaussian channel. Now there's good news and bad news when you look at the weekly Gaussian channel. The good news is that we still haven't broken into bear market territory, which is where we don't recover, which is over here. So you see, we're still not in the red zone. We're still in the green zone. However, if you look at every time we've broken into the green zone and we're not above the Gaussian levels, generally that's the beginning of the bear. So 2017, 2017, 2021, COVID anomaly, because COVID black swan, all of us stuck at home. And then generally we stay above the Gaussian channel. And generally when we break into the Gaussian channel, that basically means that and when we break down below, that's the confirmation. We're not in the red zone yet, but we have broken through the Gaussian channel here, which is not really where you want to be. Like, call a spade a spade. But right now, this one is, I think we can say inconclusive, because it's not in the red yet, but it's right there. Okay, then we have another indicator, and this is the indicator that I think is actually tricking a lot of people. So the majority of people are looking at the 50-week SMA, and they're saying, look, because we've broken down below the 50-week SMA, let me try and find that chart for you. Sorry, the 50-week SMA is here. Because we've broken down below the 50-week SMA, and we've spent more than 2 weeks down below the 50-week SMA, a lot of people are concluding that that's the end of the bull market. But the one thing that they're missing is they're missing the fact that in both previous times when this happened, and you can see it over here, when the price broke the 50-week SMA, and here, when the price broke the 50-week SMA, and here, where the price broke the 50-week SMA, the 20-week SMA also broke below the 50-week SMA. So there was a cross of the blue line over the orange line, and the price and the cross both crossed. When we look at where we are now, the 20 hasn't crossed the 50 yet, which means that it's the first time that we've broken through. Now, it is on the way down. I'll give it that. But we still haven't crossed. In the last two, we did cross, and that's what caused the beginning of the bear market. So for now, we haven't crossed, but we're on the way there. So for now, that indicator is also inconclusive. And the last thing is, the on-chain metrics. And if you look at all the on-chain metrics, we summarized it all into a spreadsheet, but some of them are saying it's time to buy, and some of them are saying it's a bear market and it's time to wait. And they're exactly 50-50. Well, there's 10 of them are saying we're at the end of the correction, and 10 of them are saying we're still in the bear market. So when you look at all the indicators, all those indicators tell you that we're in a bear market. What are these indicators? Well, they are technical indicators, 4-year cycle, 50-week SMA, etc. RSI, volumes, active addresses, and then a 50-week moving average, Gaussian channels, mainly technical analysis. The inconclusive ones are the on-chain metrics, not conclusive yet. But then you have a bunch of indicators that are showing you that actually this feels more like the bottom could be in, right? In other words, this could feel like the end of a correction and the beginning of the next part of the bull market. And that's where the camp that I've been in all this time. I'm saying, yes, of course, I understand that we're following the 4-year cycle, but this is the first 4-year cycle where the QT/QE hasn't followed the 4-year cycle, and where the expanding balance sheet doesn't line up with the 4-year cycle. Right now, QT ended at the end of the 4-year cycle, whereas in the previous cycles, QT ended in the beginning of the cycle. You can see that over here, and you can see it over here, right? So my analysis here says that if you look at a whole lot of other indicators, they're showing you that the bottom's not in. For example, let's look at the monetary policy. First thing is QT's ended. Every other time that QT's ended, Bitcoin's gone on a run. And right now, QT's ended. It didn't line up with the 4-year cycle like it did in every other cycle. But this time, it's ended. And as you can see, every time QT has ended, every time QT has gone, we have got a dropping market. And every time QT's ended, we've got an increasing market. At the same time, we've got the interest rate cycle, which is easing. We're expecting an 87.4% chance of an interest rate cut. And we know when the Fed cuts rates, within 2% of a stock market all-time high, the S&P finishes the year 12 months or the following 12 months higher 20 out of 20 times. That would mean that we'd be in a world where crypto is going down and the S&P and the NASDAQ are going up for the next 12 months. Doesn't feel right. And so I said, from that point of view, from a monetary policy point of view, it feels like it's time, the bottom is in. Okay. Then I look at some other charts and I look at the chart structure. The one chart structure that I look at is the ETH BTC chart. And the ETH BTC chart is putting in a higher high, and the dominance is starting to break down. Now, dominance doesn't break down during a bull market, during a bear market. During a bear market, dominance generally goes up. Dominance is breaking down. And at the same time, ETH BTC is putting in higher highs. At the same time, the Bitcoin chart is starting to print lower highs and higher lows and lower highs. Higher lows and higher highs. Okay. That's not a chart that's indicative of going into a bear market. So that one's telling me that this could be a bounce and that could be in. Then I look at the stablecoin dominance. And when I look at the stablecoin dominance, what I see is that we're getting to a key level here where the stablecoin dominance usually starts to reverse. Now, generally, that happens towards a bottom. There's one there, there's one there, there's one there. This is telling me that we could be in at a bottom, or at least for sure we're in a local bottom. Then I look further at the business cycle, right? And what the business cycle is telling me is that, I listened to Tom Lee at the Binance event last week. And I agree with his analysis here. I want to play this for you.
1 years exactly called the top and the lows. So the question is, why is Bitcoin subject to a 4-year cycle? We asked the Fundstrat Digital Assets team to give us the 5 most logical reasons for this. There's the halvening cycle, there's monetary policy, margin debt. But the 2 things that I think have actually become more important in our view is gold versus copper, and then the ISM, which is just your traditional economic business cycle. So let me explain. So the halving could explain Bitcoin because the halving is pre-computed, but the problem with the halving cycle explaining Bitcoin's price is that there's a lot of other things that have a 4-year cycle. Presidential elections, Olympics, World Cup, etc. But there are some things that follow a 4-year price cycle that no longer follow a 4-year price cycle. And one of them is copper versus gold. And this is a tweet from AO BTC analyst. And we decided to recreate it, which is...
Can we just spend 1 second talking about Tom Lee's hair? Because that's a lot of hair. Like, I don't think I've seen hair like that for a long time. I think he needs a haircut, though. Anyway, let's get back to the alpha.
Let's look at the ratio of copper prices, which is measuring industrial
do you
activity.
agree that he looks like he needs a bit of a haircut?
Yeah, he's serious. Serious.
Lots of hair there, bro. That's a lot of hair, bro. That's a lot of hair. That's like, you know, like men lose hair as they get older? Bro, he's growing hair.
And this guy's like Dragon Ball Z.
Yeah, I mean, but I do think he needs a haircut. I do think for sure he needs a haircut. For sure, for sure.
To monetary base, which
bro,
is gold.
look at that fringe. He needs a haircut, bro. Anyway, let's go back. Bro.
And in the past, you can see it had a predictable 4-year cycle, except this time. And if you line it up with Bitcoin and copper, they actually line up almost perfectly. But copper and gold are not in a 4-year cycle now because that ratio should have peaked this year. Similarly is ISM. ISM is a measure of US economic activity, and historically that had a 4-year cycle. But as you can see, the ISM is not following a 4-year cycle today. It's actually stayed below 50 for almost 3.5 years. If you line up the ISM to Bitcoin, you can see it almost perfectly explained.
So this ISM to Bitcoin, you can see every time the ISM breaks up, that is when Bitcoin actually starts running. And when the ISM goes down, that's when Bitcoin starts running. And so Tom Lee's whole argument here is that the business cycle this time didn't align with the 4-year cycle. And now when you look at the business cycle, and specifically you can see the business cycle through the copper to gold ratio, that copper to gold ratio marks the top of the business cycle perfectly. And it shows that we're at the bottom of the business cycle. And if you look at the previous cycles, both on the ISM and on the copper to gold ratio, which is 2 charts that actually show you the business cycle, what you can see is that this time, the business cycle didn't align with the halving cycle. And it's the first time that the business cycle didn't align with the halving cycle. And so we may have all thought that, oh, the 4-year cycle was around crypto, but actually it wasn't. It was actually around the coincidental business cycle that lined up with the 4-year cycle. And the truth is that this time, the 4-year cycle peaked, but the business cycle seems to have almost bottomed. So you can see that over here, right? We're nearly at the bottom of this channel. When you look at the ISM or the PMI, which you can look at either one of them, they measure very similar, very similar things. And what you can see is that this hasn't broken above 50. When it does, that's when the real bull market actually starts. So ultimately, when you look at the business cycle, the copper gold ratio, the silver to gold ratio, the ISM cycle, they're all telling you that the bottom is in or the bottom is close, and we're about to get into a bull market. The bull market hasn't even started yet, right? Then you move on to some more on-chain metrics. One of them being the short-term holder supply held in a loss. Now, here you can see that generally, when the short-term holder supply gets into those levels, you're actually nearing a bottom, right? And so this one also tells you that potentially you're nearing a bottom. When you look at sentiment and you look at the fear and greed indicator, the fear and greed indicator has been under in extreme greed. Here, let me just try and find it. I know I had it here somewhere. Here it is. This is, if I remember correctly, this is the second longest time that the 42% of the longest stint in fear and greed history, 64 out of 150 days of extreme fear or fear in the fear and greed index. All those things tell you that we could actually be nearing a bottom as opposed to be nearing a bear market. And then the last one that I want to look at is the Russell 2000 as an indicator, because generally, when you look at the Russell 2000, generally Bitcoin moves with the Russell 2000. The Russell 2000 is the risky stocks, and Bitcoin is obviously the risky liquid asset. And what you can see is that they generally move together. And this time there's a massive divergence. The Russell 2000 is going up, which indicates that macro is going into a real bull market. And then the Bitcoin chart, which is supposed to be the end of that liquidity curve, is actually going down. And so that's telling me that we could actually be towards a bottom and a massive catch-up trade. And so now you basically have the data. You've got the indicators that are telling you whether you're in a bull market or in a bear market, you got these indicators which are inconclusive, and then you got all these indicators which are telling you the bottom's in. Now you got to make a call. Which side of the fence do you sit on? And there's multiple sides of the fence that you can sit on. You can sit on the side where we're in a bear market and be very conservative, be out the market, and buy back a bit later. And that may be a very good position to be in. Or you may miss the pump if the pump comes, and then you may be the guy FOMOing back in, right? So you got to decide you got to take a view. Those who speculate, accumulate. If you don't speculate, you don't accumulate. You got to take a view. And if your view's right, you'll make money. And if your view's not right, you won't make money. I'm telling you, my view is that we're going back up again because I'm more fundamentalist than I am a technical analyst. That said, though, if I'm wrong, I'm holding tokens and I'm happy to hold multi-cycle, and then that's what's basically going to happen. I'm going to hold the multi-cycle. If we do continue to go down, let me show you where we can go down towards. The first level, as I said to you before, is we can go down to this 200-week SMA. And if we go to the 200-week SMA, we're going back down to $56,000, assuming that we bounce off that actual level. I hope we don't go there, but I'm just showing you that this is a possibility if we follow all the previous other bear markets. If we're following a correction, then this would be one of the deepest corrections of a cycle, and it's probably turned around now. So it just shows you all the different possibilities here. If we're in a bear market, the altcoin leverage open interest and the Bitcoin leverage open interest still haven't bottomed yet, right? There's still a bit more time to get to the bottom. So ultimately, you got to make a call now. It feels like a bear market. It does. But I also know that that's when the market's going to trick us, and that's when the market's going to bounce. And I also know that we haven't had one meaningful bounce in this bear market, not a single one since October 10th. And so for me, the worst case scenario is at least we're going to get a bounce that's going to fool everyone. And if that happens, then we're going to get into that head and shoulders formation that a lot of people are talking about, right? They are saying, I think they are looking at it. I think they're talking about this being a shoulder, this being a head, and then going up towards a shoulder. This is the shoulder, this is the head, and then they're kind of talking about going back up here and putting in another shoulder, and then that's the head and shoulders, which will actually move it. I like what 𝗙𝗏 says. I'm just sitting on trusted assets. Me too. Zcash, Bitcoin, Ethereum, Solana, and a couple of other ones. Those are the ones that I'm actually holding. I'm actually made 2 really, really good videos on Crypto Insider. They'll be coming out in the next couple of days. Really, really, really good videos that you might want to watch. That's pretty much where we're at. So, I mean, you got to make a call. My call is I'm still holding on for the bull market. I'm still optimistic about the bull market. I don't see any fundamental reason for there to be a bear market. The market's not broken. The structures are not broken. Yes, the technical structures are broken, but the fundamental structures aren't broken. And so for me, I'm still in the course of a bull market. I may be wrong, in which case I'm holding Bitcoin, Ethereum, Solana, Hyperliquid, assets that I'm happy to hold, but that's it. Someone says run is just holding round tripping. Yeah, I might round trip. Who knows? But for me, the risk of not being in the market is a much bigger risk than actually being in the market, especially on an asset class like this. Remaining uninvested sometimes can be a bigger risk than not actually catching the bounce. Before we go, just a couple of things. The first thing is Ledger, one of our sponsors and friends, are running an amazing special between now and the end of the year. And we say the end of the year for another 12 days. There's a whole lot of different. Now, I don't know if you've seen how cool these Ledger devices are, but I mean, I wouldn't be keeping money on an exchange. This is what the Ledger devices look like. They look like mini phones. The designer of these devices actually is ex-Apple, just so you know. He was the guy who designed the Apple iPhone, I think. So you can see how cool they are. So you can get these devices off with amazing specials. So I want to show you the specials. There's a link below if you want to actually capitalize on them. So if you buy this one, you pay $249, but then you get $70 worth of Bitcoin back in the ledger. So you're getting $70 worth of Bitcoin back in that ledger. If you're buying the Nano, you're getting 50% off. If you're buying the Nano S Plus, but you're paying $59, but you're getting $10 worth of Bitcoin. So go and sign up. There's a link below. Here we go. So you can see here below. Yeah, there's a link below to the Ledger a deal. Do that. Second deal that I want to show you today, and again, this is a very short-term deal, is Bitget, one of our other sponsors, have stock futures. So if you want to trade like Apple, Tesla, and you want to trade Circle, Nvidia, Tesla, Apple, Google, Amazon, Meta, and you want to trade the stocks using crypto money and actually trade futures, right? So futures on stocks. Then what they're doing is they're giving you 90% off the futures fees. Okay, that's an exclusive offer to us. There's the link. You got to sign up with that link. It's a very limited offer. If you are trading stocks, which I know a lot of you are, and you don't want to use your other money, you want to use your crypto money and keep your assets on chain, then use that and you get 90% off the fees. Anyway, my friends, I shall see you again tomorrow. And then on Thursday and Friday, I'm going to be at Solana Breakpoints. I may or may not bring you a show, depending on what the hell's going on there. See you guys again on tomorrow. Until then, trade well, my friends.